All right, guys, this week I have another group of trades that I took over the week. I actually took 7 trades over the last week, and I didn't record any videos on those trades specifically because I was on vacation all week and I didn't want to drag any equipment with me and try to do all that. So I just felt like I'll take the trades, I'll do a review post here at the end of the week, and I'll share my thoughts on all the trades I took. So I want to jump in. We're just going to get right to it, and I'll jump into the 7 different trades I took. So starting with ZAPP, Z-A-P-P, which was really hot on Monday last week here, earlier in the week, the 8th. And what I saw forming with me when this trade took off was, first off, I saw this trade, this moving up, and I saw this little small pullback right here. And then I felt like if I get confirmation where this next candle pulls above, then I'm going to jump in on the trade. And I ended up being correct on that, and guess what? The trade started to pull away. Now here's the thing. I got in right here at about 670, I think, and I stopped out at, I believe, let's see here, I stopped out at 688 with a 29-cent gain, earning $29. Now as you can see, I stopped out way too early on this particular trade. And here's the thing. When I take a trade, I got in here on this candle, and then it started to get to this candle, and it started to jump around a little bit. And I got a little bit nervous. I'm like, I locked up some profit. I got it here, but I don't want to lose what I got. And I just jumped out of the entire trade. And little did I know, guess what? It moved all the way up, making almost a $1.30 per share move from where I got in at. So, you know, I was only in on 100 shares, but $1.30, that's a $130 gain right there I could have possibly locked up. And just locking up that small move would have been huge for me. But little did I know, I felt like this trade wasn't going to go there. But there were some things that honestly I could have done that would have made this look, you know, I should have stayed in. Number one, I noticed a few different things. Number one, if you look at these bars, they're all spreading out. That's a good sign. When they start spreading out like that, my EMA, my 9 EMA, my 20, VWAP, my 200 EMA, they're all in this range. I like to see this like this range where I've got all my different EMAs and they're all spreading out like that. That tells me that the market is going in the right direction. But when I see these all clumped together and getting mixed into each other, that's not a good spot to get in usually. That's where I kind of stay away from that stuff. The other thing was good is the MACD was crossed over in the right position, and it was spread out. It was kind of diverging from each other, which was great. And then when you look at the volume bars, that should have been the biggest signal for me to stay in that trade. If you look at there's hardly any red volume bars before this one right here. So, man, there was just tons and tons of signals pointing to me like stay in that trade as long as you can, and I didn't. So I stopped out right on this candle. Should have held it way longer than I did. So that was probably the mistake. The entry was great, the exit not good at all. So I got out way too soon, even though I didn't get destroyed on that. I made out with a 29-cent gain on each share. That was great. I could have done way better. So things you learn as you're a beginning trader, and hopefully I don't make them mistakes again, because, you know, that's profit. That's money left on the table, and we don't want to do that. So, all right, let's jump into the next trade. Now, as bad as it was to make the mistake on the last trade where I didn't hold it long enough, I felt like I needed to redeem myself. So what I did was I was watching for another entry point, and I started to get this move right here where the bars were moving back up, but then it kind of stalled out, and we were getting this little bit of a pullback, which I thought was a good pullback. But when I went back and actually put this bar in place later, I realized, yeah, we were hitting a point of resistance really heavy right there. And I got back in on this particular candle right here. And while it did bust through that line, it did not hold it, and it fell through. And what I should have done in this position is just stayed out of the trade completely and not even done it. But I should have waited for this to come above and then find support on this particular line right here, which I didn't do that. I should have done that. I shouldn't even taken the trade at all, but I did. And when I was looking at the volume profile at that point, I was thinking, wow, things are looking good. We're on the right side of the MACD. Things really look like we're gonna take off right here. And we ended up taking out a small loss on there of, let's see, on that particular trade, we did a $19 loss. Now, honestly, I lost 2/3 of the money that I made from the morning. Still made out with $10 of profit. Not bad. I can live with it, and move on. I shouldn't have taken the second trade, but just knowing what I know now, I should not taken that trade at all. So, all right, let's move on to the next stock here. All right, so on July 9th, the next morning, I decided to make a few more trades. Now, I didn't see all the good trades that some of the other traders were seeing, and that just comes with experience. They were seeing a lot more of the dips and stuff like that. You weren't seeing a lot of huge squeezes on Tuesday. So you weren't seeing things just go shoot up and getting in the trade and seeing a nice pullback. I struggle with that because I got in right on these particular candles right here on this first trade for Tuesday. And I got in actually kind of late, almost 10 o'clock in the morning, which is kind of late actually. Usually I'm taking my trades by 9:30 at the latest, and 10 o'clock's usually where I'm finishing up. I'm done for the day because I usually find after 10 o'clock things are not as good for me. In very rare situations do I find that they're good for me. So I should have just stayed away and not even done these trades. Again, I saw this squeezing up and I thought, okay, we're getting a little bit of a pullback. I thought it was going to be a micro pullback where it was just going to dip back. And as soon as people took profit, this thing was going to shoot higher. And obviously it didn't do that. I got in for a small loss and let's see what I actually did on there. So I got in at 769 and I got out at 761. Not a huge loss, $8 loss. So I can't complain there. It wasn't terrible. It was the move after that when I took my second trade when I shouldn't have, after I'd already taken a bad trade and made a bad thing worse. And I got in right at this candle, and guess what? Not only did we go up and down, had some topping tails here on the last few candles, which should have been an indicator telling me don't get into this trade, and I did, and guess what? We had a little bit of a small flush right here, and I suffered out with even a little bit bigger loss there. So I ended up losing $31 on that particular trade. So overall for Tuesday on the 9th, I didn't do very good. I should have stayed away. There was a lot of good opportunities there, honestly. I just didn't get there quick enough, and I wasn't watching things as closely as I should have been, which would have changed the whole thing for me. So honestly, that was my fault on Tuesday. Almost $40 of loss right there, but not a huge loss. Still well manageable, things like that. So we can take it. We can move on and deal with it. All right, let's get into Wednesday's trade, July 10th now. All right, so for Wednesday, my biggest trade of the week was this one right here. This was probably the best trade I've taken thus far in all of my trading of the last few months, especially since the beginning of May, since I reset my paper trading account to $1,000. And as you can see, I got in right here at this point, right when this candle busted above here, the 9:30 bell hit, and guess what? All the volume rushed in at that point, and this stock just soared right up into here. Coming in for, I see what I did exactly here. Got in at 215 with 400 shares. Stopped out at 263 with a 55-cent per share gain for the trade, doing $219.20 on that trade alone, which, since I've changed things and I've gone to a $1,000 account, because that's obviously what I'm going to start with once I go into an actual real money account, that was the best move I had since, and it was great. It did exactly what I thought it was going to do. It had a lot of volume that rushed in. Obviously, with this big green bar, there was no big red bars anywhere to be seen. Even after it did that move, it pulled back a little bit and then punched up for a second move higher. And that move was a great move as well. I don't know how I would have particularly managed risk on this particular trade. On this one, I got in here, so my risk was, let's say I was at 208, and if I was, or wait, I was in at 230 and I was down at oh wait a minute. I was in at 206 and 203 was my 203 would have been my stop loss. So I was at 3 cent stop loss. So that meant, ultimately if I just did 10 or 20 cents, my profit to loss ratio was like 5-to-1 right there. So it was huge. It was obviously a good place to get in. Whereas on this particular candle, if I would wait for confirmation, well, that would be way up here, at 279. But, our stop loss is going to be at 236. So that's like a 35-cent loss, 35 cents. I'd have to do almost 70 cents here to make that a 2-to-1 profit ratio for that trade. Now, a lot of people were doing that particular day was they were buying the dips. And what I mean by that, they were buying when this got down here, they knew it was holding, they figured it was going to go back up. So there's a lot more risk with dips. I don't do dips yet because I'm still trying to learn my one strategy and get that down really well. And my pullback strategy on micro pullbacks and regular pullbacks, just trying to learn that one. And then eventually I'm going to take it a notch higher where I will try to do the dips. But right now, knowing what that trade is right there, I couldn't have managed risk very well on it. I wouldn't have had a 2-to-1 profit ratio, honestly, with it. If this candle would have been a lot further down here, we could have probably managed our risk a lot better on it. So it just is what it is. But I took the one trade that day. I left it alone after that, obviously, because I had $219, almost $220 of profit that day, which looked really good for my P&L, bumped things up a lot better, and we were starting to look good. And then we decided to get into Thursday's trades, which obviously hindered that a little bit. All right, so on Thursday, my next trade was KZIA. Now, honestly, I should have not got in this particular stock. It was a penny stock, but it was breaking above $1 at this point when I got into it. So I kind of felt like, okay, I think we're in my territory, but honestly, the range on this stock was not very much. I think it was like 15 cents. So I should have just said, nope, it's not for me. I'm not going to have enough profit on my profit to loss ratio to actually make this worthwhile. But I did it anyways, and guess what? I got in on this particular candle right here, and I had filled at $1.24, and guess what happened? Flushed out on the next trade. I got in way too high. Could not manage risk with this being where I was at. So at $1.24, I mean, support's all the way back down here, guys. I mean, 20 cents. I would have to do 40 cents on this thing, and only knowing that I could only get maybe 15 cents on the range at that point. I shouldn't have got in on this trade, shouldn't have. I mean, when I look at it overall, it made this big move here, but range-wise, I mean, penny stocks will do that. They just don't get huge ranges. So we're at $1.09 to $1.42, which was good, but penny stocks normally, like I said, don't get the range, and they don't move up as fast, and they have a hard time getting across that dollar. And as you can see, the stock's actually below $1 again. I mean, so it's not really going up a lot, and it's soon to get go up in its volume and build up and get the stock price will go up, but then look what happens. It's already sold off by so much already in the last since I took that trade on it. So I took one trade on it. I didn't lose a lot. I took 600 shares with 6 cents a share loss. So that's $36 I lost on that one little trade. Not a huge loss, but again, another loss. And wish I wouldn't have taken the trade overall, honestly. But so I think next time I'm just not going to take penny stocks into consideration. I need to know that, and I just need to stay away from them because they can really cause some issues with your trading. So that's why I stay above $1. That's why I stay typically above $2 on a price for a stock, because it just seems like those tend to work better, getting a better range, getting a better result, so that's what I stick to. So let's talk about the last stock I traded, and that was LCFY, which had some huge moves. I think went over 300% on this particular stock that day, and I traded it later on in that morning, not in the afternoon. So I traded it in the morning as well. So let's check that one out. So this stock, LCFY, moved up huge. later on in the morning. It was about 10:30 and I jumped in on about 10:26. I saw this move here and I got, guess what, FOMO, and I jumped in right up in here and boom, guess what happened? Flushed right down here. I think I jumped in at, let's see, 9:03. So 9:03 way up in here. Probably here. Yeah. So I jumped in here and it bumped up and then dropped, flushed, huge, big flush, 32 cents per share loss, 100 shares. So we're talking $32 I lost on that particular trade. Should have not done that because I had FOMO and I was thinking, let's get in the trade. Let's get in there because there's something happening. Should have got in way sooner than I did. And honestly, it felt like the right spot, but when I look at it from a risk to reward profit ratio, it was definitely not a 2-to-1 profit ratio. I mean, if we got in at 9:03, support is way down here again, and way down here. So we did not get in at the right spot. We should have waited for the right pullback, should have held off, and then got in. And honestly, it got pretty choppy in that stock, but then it rallied back, and guess what? It started to come back again, made some big moves. So honestly, that was the final trade that I took. Now, when we look at my overall for the week on ZAPP, we had $29, and then on VPRX, I had $219.20. And then when you take over these trades, I had an actual profit of $22.20 for the week. So very good P&L this week. I had $122 in profit. So things are looking good. Maybe we can cut down on a few of these other trades here and not gone in them just because we looked at the profit and reward, loss ratio and would have made a better decision there than the one that we did. And maybe we would have neglected to take a few of these trades that we did do, and that would shore things up. Now, one thing that is not so good on this chart is that my success rate is right around a 36% yet. That's what I did, I believe, in the month of June. So 36 in June, and then in May, I was right at about 40%. So still not quite on as far as success rate goes. Still not there, still not hitting that. But other good things that are good, when we look at our average green trade, we're at $75.18 a trade. Our average red trade is $32.86, making our profit loss ratio a 2.28 to 1. A 2 to 1 is what I'm shooting for. I'm definitely hitting that. So I'm getting the right thing, getting the best, hitting the right spot. My total monthly P&L is still $70. We're in the green yet. We're still moving good. I think we just got to shore up on getting out of some of these bad trades, not taking them, and just neglecting some of them and moving on to the better trades, focusing on the right profit to loss ratio. And then I think we'll start to see things turn around and we'll start to get above that 50% success rate, which is what we're shooting for. And hopefully by the end of the month, we're really seeing that. We're seeing a 50% profit to loss ratio. We got to be patient. We got to be calm. We got to be collective. We can't let emotions take control of the trading process because that will ruin your entire trading business if you do that. And so you have to neglect those things. You have to get things in where you keep things calm, think things collective, and just make A-plus trades and do base hits, not trying to go for grand slams every single time, just trying to go for a good base hit every single time. Sometimes we'll have some big winners. Sometimes we'll just have the regular normal 10 or 20 cent winners, and that's great. That's what I want to see. So overall, I felt like the week was good. We did pretty good for being on vacation. First time I ever traded being on vacation before. So found that to be pretty good and ended up being one of my best weeks ever. If you would have told me that was going to happen, I would have told you that's crazy. I didn't think that would really actually happen. Versus last week where I had over a $50 loss and things like that. So obviously things are turning around. I think we're getting better at making better trades. We just still got to dial things in on our success rate, picking the right trades, the A+ quality trades, getting our accuracy down, and I think we'll eventually be able to move up to 50% on that. So I will see you on Monday for my next trade. So see you then.